DJ.
All right, so I want to welcome everyone to Caribbean Rhythms Radio Network. We are live this evening, 4 minutes after 6 o'clock. And this beautiful Saturday, we're going into the Caribbean Diaspora Live. Welcome, everybody.
Welcome everyone. So my camera, for whatever reason today, is decided, to play tricks, but we are not going to let that stop the show. Thank you everyone for joining us on Caribbean Diaspora Vibes. My name is Donna Morton, and I am the president of Caribbean American Diaspora Alliance, president of Women of Culture Incorporated, mindset coach of Inner Vibes Consulting, of course, real estate broker at Florida Summer Homes Realty. We've got an awesome lineup to kick off the 2023. There's so many things on our vision board to get done. We want health, we want wealth, we want money, some of us want husbands, some of us want ex-husbands, ex-wives. So there's all these different things that people want, right? So we are here today, however, to focus on home ownership, to focus on credit, how to get that credit score up to that 700 plus, right? How to get a really proper, healthy banking profile. All these things that we don't think about. Before you call me to buy a house, or Louis down in Kissimmee to buy the house, you need to be ready. There are the things that need to happen. It's a puzzle.
Yep.
What we are here talking about tonight. So I want to welcome you to several amazing guests tonight. First, we have Damaris Diaz, who is sales manager of Trinity Enterprises. She's the go-to for credit repair and services, and she's joined by DJ Hardrick. And then we have also Mr. Gary Moses with First Horizon Bank, and he's going to be talking to us about building a positive financial profile, all about, if you need a second chance, you messed up with the banking system, but maybe you need a second chance at getting a bank account. Maybe you need a secured credit card for those of you who need to establish credit. So we're going to be talking about all of these things today. So first, let's welcome and thank you for joining, Damaris.
Thank you for inviting me, Ms. Donna. I know we've talked about your program and me visiting for a while, right? Finally, I'm here, and I am so honored that you invited me. And I also invited along Dr. Hardrick. He's been behind the scenes with Trinity I've been with Trinity for almost 12 years, and he's been with us more than that. And he's joining us tonight as well. So I'm very honored. Thank you very much for the invitation.
Thank you. Before we get even to is it DJ Hardrick, I just want to say, is it DJ or doctor? Let me just make sure.
Dr. Hardrick.
I do have my doctorate, but I'm not into titles, so I typically don't use it, but I have earned my doctorate.
Well, I didn't know if it was a mistype, so I wanted to make sure. Because we already had tagged you as another DJ with Louis. So, Louis, how are you? Happy Saturday.
I am doing well, Donna. How are you guys? It's good to be here. It's a beautiful Saturday afternoon, and it's always a pleasure being here on the Caribbean Diaspora Vibes. We want to welcome all our listeners across the world, and we hope all is well. And welcome to all our panel members this evening.
Yes, so as soon as I started, the computer decided to do something strange. We know how to go around these things, right? You just shut it down and speak. Sometimes you gotta, you have to be able to be adaptable. And we live in a world where you have to be adaptable right now. We're in high interest rates, mortgages, high rent, everything is high. Eggs, everything is outrageous. So we have got to learn how to budget properly. We've got to get those credit scores up. buying a home, for everything that demands to be pulled, insurance, car payments, everything. So we are just thankful. And finally, I have Damaris on to be able to join us. So Damaris, tell us, what can we do? Or you tell us, to get to that 700 score. Everybody wants the 700 plus score, right?
I'm here because of that 700. Okay.
And there are some things and some discipline. So between and DJ, please share.
Yes, and thank you so much. I'm glad that you mentioned that we do have to be adaptable. I have 2 cell phones with me. I have a computer because at some point I knew one was going to fail me. So I was able to move on to the next one. And the reality is this industry is definitely score oriented. It's always been, but now more than ever. And there is a formula. There is a formula to keep that credit score over 720. I'm glad that you send me the notes. That way we can stay on track and kind of try to cover everything that really make up the score, because there are multiple factors that make up a score. I always tell my clients, think of a pizza, right? Because I don't have the graph to show you right now, but think of a pizza. Now I don't eat a whole pizza by myself, and I don't think any of us here can eat a whole pizza, right? But let's say I'll take 3 slices, and that's 30% of the scores have to do with history. 35% have to do with revolving credit. So revolving credit has to do with credit cards, and it's the most important factor actually because of the history and how you have the opportunity to manipulate the score by how you're using your credit cards, right? So the credit cards are there to use it. But I tell usually the recommendation is that 3 months, 6 months prior to applying for any type of financing to pay down those credit cards and even pay them off. Not keep them without using, because you don't want the financial institution to close the account, right? For lack of recent revolving activity. There's score models, right? There are multiple factors that make up the score. We're still in the pizza. Now we talk about when there are negative accounts on the credit, they can affect 38 to 40%. So when the credit is affected, you always want to go through what we call the credit restoration process. And I want Mr. Dr. Hardrick to participate with me, because he has been a great mentor for me for Trinity. I will always say it, and it's not that I'm constantly accolading people, but I have to give honor to whom honor is due, right? He's taught me a lot, and I've been able to apply what I've learned and run with it. So DJ, what other factors are considered other than revolving credit, other than payment history of how long accounts have been established? Can you elaborate on the credit restoration process?
Sure. Thank you, Damaris. And thank you all for having us here. Trinity always appreciates any opportunity we have to share credit information, because our vision is for people to be credit wise and to be financially free, debt free, so they can live their best lives now. Adding to what Damaris said, there are 5 components that people have to look at when they want to make sure that they're getting to that 700 or above. One of the components not mentioned is credit mix. So I know, especially in our African American community and sometimes our Hispanic community, children are taught that credit cards are bad. Credit cards are not bad. How you use them is what makes them bad. So you have to have a good credit mix in order to get to that 700 above. And that means you do have to have credit cards, revolving credit, and you have to have installment payments. So that means when you have a car loan, or if you go buy something and it's not an open line of credit and they give you a set amount of payments and you make those payments and then the account is closed, those are installment payments. So you need revolving and installment. That takes up 10% of your credit score. The other 10% is new credit. So you want to make sure that if you do have credit, that credit gets to be at least 2 years or older. Anything under 2 years old is considered new credit. And to get it out of new credit, you got to keep it long enough so that way people can see that you can handle your credit, and that gives you a higher credit score. So open it and keep it open. Never close it. If you close it, that hurts your credit because now you're hurting your age. You want to make sure that your credit score is always based on things that are more than 2 years old. Then that's 10% of your credit score. 15% of your credit score is actually the length of credit. What is your average credit? So we want to make sure that we don't tell people when they're 18, don't open a credit card. No, open that credit card. Just use it wisely. So when you want to buy that house at 22, now you've had that credit card for 4 years. So now the average age could be 4 years for your credit history, which is 15% of your credit score. So just having the cards and use them, keep them over 2 years, making sure you have a good credit mix. And then like Damaris said, you want to make sure that you have payment history and utilization. So you want to make sure that you're using the cards, but keeping the balance on the card less than 30% of the credit limit. So if your credit limit is 10,000, you want to make sure that the credit balance is less than 3,000 in order to have great credit. To have excellent credit, the goal is to always be under 10%. So those 5 components are what make up a credit score. So even if you were to use our services at Trinity and we deleted things for you, you would have to make sure you're doing those 5 components in order to have your score go up. Just removing the credit, just removing the negative credit does not make your score go up. It helps you clean up your credit report, but then you have to do those 5 components to make sure that the score goes up. So that's the overview. When people come to Trinity for that credit restoration journey, we call that our 11 indicators, and we make sure you become a partner with us and take you through those 11 indicators. So as we're working to help you delete inaccurate, negative information, you're adding positive credit to it by working those 5 components.
And I want to mention, DJ, let's do some interaction here. Let's say I've been doing everything exactly, like I was recommended to do. I'm following the 11 indicators, and life is very busy nowadays. Everything is so hectic, in school and family and all those dynamics right now. And I forget to pay one credit card. What happens when I forget to pay one credit card?
So if you don't pay that one credit card, that becomes a late. And lates hurt. Lates can drop your score 10 to 15 points per late. So if you're late 1 month, that's 10 to 15 points. You're late a second month, that's 10 to 15 points. And so now your score is dropping just from that one late. So you want to make sure that you always pay things on time. And lates can stay on your credit report up to 7 years. And so we want to make sure Donna's like, oh no. So you want to make sure that you're paying things on time, because that is the biggest part. That payment history is 30% of your credit score. So just paying things on time.
You want to pay your bills on time, but we know that life happens sometimes, right? Mm-hmm. And I know in the past that it happened to me one time that I forgot to pay one credit card, but the time lapse have not been over 30 days. And I remember calling my creditor mm-hmm. and reminding them, listen, I have been an excellent customer for so many years. I have never been late. Did you report me to the credit bureaus? They're like, no, we haven't reported you late. And because I took the initiative to call them, they actually remove my late fee as well. Okay, so it can be caught on time because they do not report late until after the first 30 days of the missed payment. Is that correct, Mr. Hardrick?
Yes, you have 30 days to get it paid, and then that way you can make sure that report late. But if you let it go that 30 days, it's going to hit you really hard, that 10 to 15 points. But like the mayor said, get your money back. Call them and say, I've been with you a long time. And everybody's human. So can you give me some grace and some mercy this one time? And usually they will, and they'll refund that late fee.
Yes, and one recommendation that we make for our clientele is to go ahead and put an automatic payment, because sometimes, some people are a little forgetful, right? And so you always want to be, like we say, ahead of the game, put them on auto payment. Do not overspend, try to pay them down before the billing cycle ends and the reporting day. One thing that I've noticed, sometimes our clients, they use that grace period, and we don't recommend that, especially when you are progressing towards making a major financial purchase, such as a home. We don't recommend buying the car before you buy the home. That's one of our 11 indicators that they do not make any purchases, no inquiries, maintain your bills on time, because we're going to tell it all to the realtor and the lender.
Yes, that is one thing that we see, you know, so often is someone will go out and buy this amazing, beautiful car, truck, and do not, or both, and do not own a home. And then they try to come in. I mean, if the income is there, fine. But for many, many persons, it disqualifies them because of that.
Mhm.
Yes, and that's why the advantage, and it's not that I'm trying to sell Trinity right now, right? Because we are really bringing education right now. We want to educate our community. We want to educate every person that we come in contact with. I've been, like I mentioned, with Trinity for almost 12 years now. And we do have a passion to educate people. Okay. And once we make the connection with the client, when we bring them on board, meaning they go through the onboarding process, we're constantly reminding them of the goal. Hey, don't forget, you enroll with us because Donna referred you, and you mentioned to her you want to buy a home, and she took you to the lender, and now she brought you to Trinity, and we're going through the process of getting rid of the negative accounts without you having to settle them. It is possible. So DJ, let's mention some of the processes for how we remove a collection or repossession, etc.
So our goal at Trinity is to make sure that people are not paying for debts they shouldn't be paying for. So we look at those inaccurate negative items on credit reports. And the statute basically says that things have to be verifiable. And if you can't verify it, then it has to be removed. And so our job is to make sure that those creditors, those collection agencies are able to verify that that is actually yours. And if it's not, it gets removed. And one of the things is, for example, medical collections. Medical collections fall under HIPAA as part of the law. The statute says that you can't share my medical information without my permission. And I never gave you permission to share my medical bills with a collection agency. So that's one of the ways we go after the collections that are medical with the statute, because that's HIPAA. You know, you can't share my information unless I really say that you can. So that's one thing. The other part of it is that things have to be accurate. If it's 1 penny off, that's not accurate. And so then you have to remove that because the law says it has to be accurate. So if you repossessed my car and you sold it and I owed you $10,000 and you collected $5,000 off of selling it, now I don't owe you $10,000 anymore. I only owe you $5,000 and you're reporting it as 10. So you have to remove that off my credit because that balance is inaccurate. So our job is to make sure that creditors understand that if they're going to put something on your credit, it has to be accurate. And if not, it needs to be removed. And so that's our specialty at Trinity, is using statutes to go against the reporting agencies to let them know you can't report that if it's not accurate. So we do use statutes. Unlike other agencies, we educate, and then we use the law to fight for people.
And if I may add, real quick, there was a consensus. Actually, it was a documentary that I saw about 7 years ago, and they did an investigation. And the statistics is that 1 out of 3 credit files in the credit bureaus had inaccuracies. Because, you know, the credit bureaus are for-profit organization, just like any McDonald's, any Home Depot. They make money by reporting I always say the good, the bad, and the ugly. Some of them report only the ugly, right? But what they have to pay, the creditors have to pay the credit bureaus to report information every month. And what I've noticed, you know, being at Trinity so long, is that they take a vehicle, the vehicle is repossessed, they sell it at the auction, and they never update the balance. That is very common. The consumer has the responsibility to review their credit profile, okay? And many people that are referred to us, you know, they think, okay, I can go to Dr. Google and do this myself, but times have changed. Can we share, DJ, how times have really changed, especially after COVID?
Yes, and like the mayor was saying, the credit agencies, they're for-profit agencies. Many people think they're government agencies, but they're not. So Equifax, Experian, and TransUnion are not government agencies, although many people think they are. And they do make money by reporting information. So they're in the business of reporting, not in the business of making sure that things are accurate. And so times have changed, and because they need to make money, they keep changing their rules about how they are going to verify information. And so that way people who try to do it on their own, they don't know the rules are changing. And so when they try to keep up with the timelines, they can't. So we tell people all the time, you can restore your credit on your own anytime you want to. But if you're not going to be able to keep up with those timelines, you're never going to get through the process. So you're paying us for the expertise of understanding every time Experian changes their rules, every time Equifax changes their rules or TransUnion changes their rules about how they verify and what their timeline is, we're keeping up with that for you. So when clients come to us, you're using us for our expertise of the statutes on how we attack that inaccurate negative information and for keeping up with the changing times. Bureaus are now trying to use email addresses to verify. Well, what if that was my old email address and not what I use today? So that's not my email address anymore. For example, many of us in college, the college gives you an email address. So you use that email address for everything. And then once you graduate and you move on, that's no longer your email address, but they're using that to tie you to something that you did in college that you may not even remember. And the balances have changed, or you may have paid it off, but because they're using old email addresses or old physical addresses where you're living, they're verifying it that way. But we understand those changes. And so we make sure that we verify things with your current information. So that way they have to update and follow the actual processes. And when they can't verify, they have to remove that information. So again, it's about educating clients. And it's also about letting people know we're not here just to take money from people. We're here to educate people. And that's why we let people know up front, you could do this yourself, but you won't get through the process as successful as using us as your partner.
Wow. So what things can you guys take off? For example, like maybe not everything, but just examples of things that you've removed.
So we've helped clients with bankruptcies. When you go and research their bankruptcy, what's being reported is completely inaccurate. And sometimes the bankruptcy has been cleared up and the client don't know it's been cleared up. And so we go to the actual clerk of the courts and we pull up your bankruptcy and we go through the pages of your bankruptcy to see how it was filed and what was the outcome. And then we match that to your credit report. And if there's an inaccuracy, then we show the agencies, whether it's TransUnion or Equifax or Experian, that information is inaccurate and you have to delete that. So it doesn't really matter what the negative item is. What matters is if it's inaccurate. If it's inaccurate, the statute says it has to be deleted. So we go after everything. We don't limit it to just one type. It's anything that's on your credit report that is negative, making sure that if it is negative, is it being reported accurately? And if it's not, then it needs to be deleted.
So guys, good job so far. I am a realtor, and so I work with my clients and I try to explain to them, don't go over 30% on your credit card, right?
Mm-hmm.
And this happened to us, my wife and myself. We went and make some purchase just last week. And one of the card that we use, it was like a little bit on the 30%, because we sort of balance things there. And it just went over 30%, maybe by less than $100, man. And do you know that our credit score, Equifax dropped 20% on our credit score, and TransUnion, Experience, I think, dropped 7%. Explain how these things work, because not everybody can we talk about discipline. I think Donna talked about discipline earlier on. Not everybody really have the discipline to keep their credit card at that 30% threshold that we talk about. Talk to us, and I'm pretty sure there's a lot of people want to understand or don't understand this scenario.
Right. So that's a good question. So what happens is most people, when they go to their credit monitor, they use Identity IQ or MyFICO or Experian, whoever they use. What they're looking at is the overall utilization, which may say that you're under 30%, but then your score keeps dropping. They're actually looking at it per card, not just your total. So if you have 10 credit cards, you have to make sure each card is always under 30%. Although we don't use or prefer to use Credit Karma for our monitoring system because it doesn't give full information we need in order to verify for inaccuracies. But Credit Karma is good for showing people the concept you're talking about, because when you go into Credit Karma, it will list each card and tell you what is the utilization by card as well as your overall utilization. So every time an individual card goes over 30%, your score drops. So you always have to say, what is my credit limit? And multiply your credit limit by 30%. And whatever that number is, you have to make sure you stay under. So a good practice is to list each credit card you have. What is the credit limit? What is my balance? What is my 30% threshold? And always keep that readily available so you can verify card by card. Even with your installments, when they first purchase the installment, you're at 100%, you're maxed out. Anything over 90 is maxed out. So until you make a couple of payments, even though the installment is good for credit mix, the installment is bad for utilization. So you want to get that installment paid under 90% as fast as possible so it doesn't register as maxed out.
And if I may add social proof real quick, I have multiple credit cards. So let me tell you what happened to me, just in case who's hearing us out there and have multiple credit cards. Once you have them all over 30%, gotta be careful, because some of these creditors, they will monitor how the consumer is using the credit cards, and they might decrease the line of credit they had already extended. It happened to one of mine because, I purchased a home about a year and a half ago, and I have paid them off so my score can go up. Remember, we talked about 35% of the scores come from revolving credit, and there's a way to manipulate the credit with the credit cards. And then once I moved, we purchased everything in the house with the credit cards. But I took too long to lower the balances. And what happened? Some of the creditors were monitoring me, and one was lowered the limit from $10,000 to $3,000. And I owed to over $2,000. So that means he was almost at 90-something% of credit usage. So that is very important to keep them under 30%.
Right. And so we always encourage clients to do is once a year, you want to call your creditor and request a credit limit increase. So that way you're always been able to use more. So if your credit card was only a $1,000 limit, you can only spend $300. So really, you don't really get to use the whole $1,000 if you want to keep good credit. So each year, paying that card on time, you want to call in and ask for a credit limit increase. So then they may raise it to $2,000. So now you can spend $600 on that card. So each year you want to keep good payment history with that creditor and then call in and ask them for a credit limit increase. So that way you can use more of the card, because the cards are there for emergencies, but you use it, but you go at that 30%, it tanks your score. So each year, so that way you can use more of the cards for those major things like buying a home, and them not saying that you're over 30% or you're at 50%. You want to keep asking them each year, make sure you're paying the bill on time each month, but to raise my credit limit, and they will. Because they only review when you update your income, and they say, oh, well, you got more income, now I can give you more credit, or you've been with me for 5 years, now I can up your credit. But if you prompt them to review and you've had great credit payments with them, they will increase it. It doesn't have to only increase to $500. The point is you keep it increasing so you can use more of it when you need it.
That's awesome. How do you deal with people who have disputes on their credit? That is something I come across, at least 3 clients that I have that have dispute on their credit. They're just disputing something. And I know that my bank or not, none of the banks or lenders that I have will deal with anyone that have a dispute, because you're saying, I didn't do it, or I don't owe that money, or whatever the case might be. How do you deal with disputes on someone credits?
We, well, when the clients are referred to us and they enroll in the program, it's not time to apply for the loan yet. They have to be done with the program. We have two different programs. One, we have to dispute any open account, any open and active account with late payments. Those late payments can potentially be removed, because it's not about was the person late or not. It's about the creditor follow the proper procedure before they reported the client late to the credit bureau. So that account will be in dispute. However, the consumer has the right to call the credit bureaus and tell them, I no longer wish to continue disputing that account. I already settled the matter with the creditor. So a lot of times when the clients are in the credit repair process and we are holding the credit bureaus accountable for the collection or whichever account may be, the client cannot get ahead of themselves and go directly to the lender before discussing it with us, before knowing that the scores are where they need to be. Because when you remove accounts in dispute, the scores will drop. So if we already know that we need a 640, let's try to get them past 650, 660. And then let's say the client had 5 negative accounts and we got 4 deleted, right? And you only have 1 account in dispute. The consumer has the right to call the credit bureaus and request for that dispute to be removed before they go and apply for the loan.
Right. And because disputes, you have to remember, if the client is doing it on their own and they just go through Credit Karma or Experian and they click, I want to dispute this, it's going to dispute it based on just general dispute options. It's not going to dispute it on the statutes. So that's why those disputes stay so long sometimes, is because it's just in this ever-turning cycle of the client clicking inside Experian or clicking inside of Credit Karma. I didn't do that. That's not mine. And then they're sending it back to the creditor. The creditor saying, no, that's theirs. We verified it with their old email address, or we verified it with their old physical address, or we verified with the old phone number. And then it stays on there. So the client clicks it again. I want to dispute. And they get in that cycle because they're not disputing based on anything statutory. They're just disputing saying it's not mine. And all the creditor and the credit agency is doing a simple verification. Once that happens, it stays on their credit. So again, that's why we tell people all the time, you could do this on your own. You just won't get through the process like you want to, versus coming to us. When we dispute, we're going to attack the credit agency with the statute. This is a collection from a medical. Do you have permission to have their information per HIPAA? This is a bankruptcy, and the dollar amount is off. You're not reporting the right dollar amount, and the statute says you have to take it off. So that's why when they go to the lenders, they can't get through. Those disputes are there because they keep clicking inside those automated credit monitoring systems trying to dispute it. And it's just going through a cycle of, I verified it, that's you. I verified it, that's you. I verified, that's you. They're not verifying the information when they click, they're verifying the person. And that's the difference. Is the statute says, is the information correct, not the correct person.
Amazing. As we wrap up with credit and go to banking, how long is this process with you guys for if someone wants to dispute?
So our process, we start with a 6-month time period, but within that 6-month time period, we've seen results happen in 45 days, 60 days, 90 days. So if you achieve your goal with us within those 45 or 60 or 90 days, we still stay with you the whole 6 months. Because again, our job is for you to be a credit-wise consumer. So you don't have to come back to us for credit restoration, for deletions. You can come back to us about other ways to have positive credit reporting for myself so that I can be more independent in my credit worthiness.
Amazing. We'll have questions at the end. I just want to recognize Anita Singh and Dr. Bhavan Dabrio with Caribbean Diaspora Alliance. Hi, ladies.
Hey, Donna.
Thank you for joining. I know everyone's busy on this Saturday. So we are going to go ahead into banking with Mr. Gary Moses of First Horizon Bank. I should say that First Horizon is our bank for Caribbean American Diaspora Alliance and Women of Culture, Inc. So, of course, I wanted to reach out to them because we do have some second chance programs. And, one good thing, talking about credit, sometimes we don't have credit. And I know that sometimes having that secured credit is important, or just budgeting. A lot of times, even with the late payments and so forth, it's all because we don't budget. We don't budget. We don't think it's important. We just live and
it's in the culture. Part of the culture, just spend the thing.
Yeah, and they don't want to. You don't want to sit.
Yeah.
Family as a couple, you have to know who's paying what. It has to be clear who's responsible for what. So you don't think that he's paying that credit card and she's paying this, and then it doesn't get done. And a lot of times that causes a lot of problems. So Gary, welcome.
Good evening, everyone. Thank you for having me. Damaris and Dr. Hardrick. I'm going to call you Doctor because you earned that. You guys did a phenomenal job. I even learned a few things. What I'm going to discuss this evening is really under the auspices of financial education in totality. We're going to start with bank relationships. In our community, banking is treated as a four-letter word. There's a lot of people that do not trust banks. I've had people come into my office and their money has previously been in their mattress or hidden around the home. And you may feel good about that until your house burns down. You may feel good about that until you get robbed, because guess what you cannot do? You cannot claim that on insurance. If I, as the bank, get robbed, you are totally secure. Your money hasn't gone anywhere. So we need to get over the mindset of the big bad bank, the bank that is looking to take from you. Now, in that vein, banks are not nonprofit organizations. Just like the credit bureaus, banks are designed to make money. I challenge anyone to look at the annual earnings and find the bank that has not had record profits every single year since inception. It just doesn't happen. So banks make money, but the key is to find a bank that understands you, and more importantly, a banker that understands you. I tell my clients, we are going to make money regardless. It's not my job to nickel and dime you. It's my job to identify your needs and offer appropriate solutions, right? So you may come in and ask for something, and I determine that what you just asked for is not right for you. You have to now be open to listen and receive that conversation, because you're coming to me as the financial expert. You're not coming to me for brain surgery, God forbid. You're coming to me for finances, and that's something that for over 20 years I'm well versed in. So when we discuss banking relationships, you should have at least one solid bank relationship. There's nothing wrong with having more than one bank or add a credit union in there, but you should have at least one solid bank relationship, because relationships matter. When we do things, we look to see one of the first things we look at is how long have they been with us. If they've been with us 30 days, 60 days, 90 days, you're a new client. If you've been with us a year, you're a new client. But the longer you're with us, the more apt you will get things done, right? So relationships, it's very, very important. And then once you find that bank that you're comfortable with, find a go-to person within the bank. If it's not the banking center manager, go to the assistant manager. Sometimes you can go to the senior banker that's in the office, but make sure that you have an advocate within that office, because if you don't have an advocate, and I ask people all the time, who's your bank? They tell me, and I go through this list purposely. Then I say, who is your banker? Sometimes they can tell me, sometimes they can't. Sometimes they just say, well, whoever I see. And if they tell me who their banker is, then I ask them what's their cell phone number. That stumps about 95% of the people. And the reason I ask that is, if you are entrusting me with your finances and your day-to-day life, you can have my cell phone number. It's printed on my cards, it's on my email, and I do not deny anyone. A lot of times I put my clients' names in my cell phone, so when they call, I recognize them right away, right? So those are some things. If people say, well, I don't give out my number, that's fine, because sometimes the bank doesn't allow that. But if they take it or they offer it to you, they're building a solid relationship with you, right? And you can't fault that. So we have to, again, get out of the mindset, teach our children early to save, to set up that relationship. And really, the relationship should grow, should be able to grow as you grow. So if you have, oh yeah, I have a savings account and I'm 18, that's fantastic. But if you're 38, yeah, I only have a savings account, you know, we need to talk, right? Because your relationship in the bank has not grown with you. The next thing that we want to talk about is, because we all go through things, life happens, right? That's why we have credit counseling here, because life happens. And one thing, when it happens at a bank, let's say you have what we call account abuse. And account abuse, it's a harsh term, and it can mean so many different things across so many different banks. It could mean that you were overdrawn too many times. It could mean that you had some checks that were returned too many times. It could mean that you had deposits returned. And again, 9 times out of 10, when you're depositing something, someone is giving you a check, or typically it's only a check that's going to be returned. And that's not necessarily your fault, but it could be listed as account abuse, which in turn, typically it's about $100. If you owe the bank more than $100, or you are closed for account abuse, you get reported to a company called Check Systems. Check Systems will hang on to your name with that negative profile for 7 years. So we often find people that bounce from bank to bank trying to open accounts, not realizing that they're on Check Systems. And guess what? If you're on Check Systems with one bank, you're on Check Systems with all banks. And the unfortunate thing is, we can see when you've attempted to open different accounts, because now that raises red flags. What are you attempting to do, right? And in your mind, you're just wanting to get an account. So understand your banking history. Understand, if you're on Check Systems, the first thing you want to do is clear up what was the negative. If you owe the bank money, you have to pay it, unless it was their error. And I tell people, 99% of the time, it's not bank error. Because if it is bank error, you get your money back right away, and there's no negative consequences. So if you owe the bank, and I've had people, oh, it's $100, and they feel it's only $100. Well, that $100 could prevent you from starting a new banking relationship. So you want to clear that up. And a lot of times we have leeway. I have leeway to approve clients in my office. So if there is someone on Check Systems and my staff comes to me, I can give a thumbs up or say, no, I'm unfortunately not going to approve that one. But if I choose not to approve it, we also have other avenues called second chance accounts. So if there's somebody that I see that needs an account, they need to deposit their paycheck, they do not want to go to AmScot, they do not want to pay me a check cashing fee every week or every other week, we are more than happy to open a second chance account for that person. And just like with the credit repair, they now have to be disciplined and utilize that account in a positive way. Means no overdrafts, means no long-term negative, which again is an overdraft. So basically you have to be perfect on that second chance account for about 18 months. People may say, well, 18 months is a long time. Well, you know what's longer? 7 years. So if you maintain that good account for 18 months, we can now go ahead and turn you into a mainstream account that better suits your needs. But think about this. How much money have you been spending on a check cashing place? Or you get a check from your employer and you go to their bank. Their bank is going to say, well, are you a client of ours? You're going to say no. They're going to say, well, it's going to be either a percentage or a $8, $10 fee to cash that check. Over the course of the year, depending on how much times you get paid, let's say you get paid once a week, 52 weeks minus your vacation, 50 weeks, it's $500. That could be another paycheck for some people, right? So those are the things that we need to think about when doing things like cashing as a non-bank person, or what we call an underbanked person, because it's our job to try and increase the banked population in the low to moderate income, as well as, all across the board. But in the LMI, which is my abbreviation to low to moderate income, it's almost an epidemic, because again, you've heard of food deserts. People don't talk about a bank desert. Look around some of the poorer neighborhoods. You don't see banks, right? Sometimes if you do see a bank, they were left over from a better time. But nowadays, you don't necessarily need the bank in your backyard to be able to bank, because the majority of all of our clients bank online. So as long as you have a cell phone with online, you have a computer, you have a desktop, you can navigate your banking 100%. That doesn't mean I don't want to see you. You could always come in and say hi. But you still have the ability to navigate, and we stress that we want you to go online, because we want you to be in tune with your own what's going on in the bank. We want to be in tune if there is fraud, because we do have time limits to be able to interact with someone that has fraud. 60 days for personal, 30 days for business. Why do we have those time limits? Because you should be looking at your bank account at least every 60 days. And if you're running a business, we tell you need to be looking at your account every day, but we give you a grace of 30 days to look at that account. So we encourage you to always stay on top. And the minute you see something that is not appropriate, or something that you knew you did not do, then you come into us and we work with you at that point. So that, that's pretty much the second chance account, which drives you into now a relationship that you can lean on and depend on later on. Because the minute you walk in, the minute you say hello, the minute you shake my hand or anybody's hands, the minute you open that account, your relationship starts. And you have to treat it as you would treat your family member. Welcoming and open and honest. Now, along with second chance, this goes hand in hand, secured credit. So let's say you weren't the best with your credit. You didn't listen to anything Dr. Hardrick and Damaris had to say. But you find yourself unable to do certain things. You can't rent a car. You can't, there's nothing there for unexpected purchases. So you need a credit card. And again, the credit card is going to help you reestablish credit. So what is a secured credit card? Typically, it's a dollar for dollar or close to dollar for dollar cash secured. So if you have money on the other side of your mattress that you forgot about, and you wanted a secured credit card, all you have to do is come and put that on deposit. You will be approved for a secured credit card. I did one the other day for $1,000. They got a $900 credit limit. And after, just like with the second chance account, after a certain number of months, it's typically, and it is, depends on the bank, between 12 and 18 months, we review your usage and of course your payment history. And then we can, the goal is to get you out of that secured account and get you into a mainstream account. But the plus side of a secured account, it's also forcing you to save, because that money that's on deposit is not accessible by you, and it's earning interest by you. Okay, so that's the plus side. So somebody says, well, you're giving me a $500 credit card and I have to give you $600. You know, what's the sense in that? The sense in that is that you're saving and you're building your credit. You're investing in yourself,
Yes.
right? So that's what the sense in that is. So there are options for people. There's always options for people. One of the other big things I want to discuss is budgeting. We need to have a budget. And I know that the folks at Trinity would tell you the same thing. You have to have a budget. And how, what do you do? How do you start a budget? Well, the first thing you want to do is look at your spending habits, right? And let's say, for example, your spending habits include every morning you stopping off at Starbucks and buying a $10 latte, but you're complaining that you don't have enough money at the end of the week, but you just spend $50 in Starbucks. You have to honestly list every single thing that you spend. Don't leave something out because that's what you like. Because if you leave something out, chances are it's one of the most expensive things. So you have to honestly, and the best way to start a budget is list every single thing that you spend on a daily basis. You can do that for no less than a week. Typically, I like to see 30 days, and then we can now look at what things are important, what things are necessary, what things are not necessary. So because we know how much money you're going to make, right? Your paycheck is not going to fluctuate that much unless you are on some type of commission sales. So we know what your check is going to look like. Now, once we determine what your expenses look like, we have to look at what are those non-negotiable expenses. Mortgage, it's non-negotiable. Rent, non-negotiable. Car payment, non-negotiable. Lights and utilities, non-negotiable. Food, non-negotiable, right? Movies, negotiable. Eating out, negotiable, right? Buying a new outfit every single week, negotiable. So now once you eliminate the things that you do not need, look at your surplus. If there is no surplus, you got a problem. We call in my business, if your liabilities are more than your assets, you're bankrupt. So you need to look at what your surplus is. If your surplus is not where you want it to be, you have options still. You can look for a different job. Nowadays, jobs are plentiful. You can look for an additional job. But again, you have options, right? But the biggest thing is keep that budget. Once the budget is done, now stick to it. And part of your budget should be entertainment, mad money. So now let's say, okay, I've got $20 a week. I'm a single person. That's my entertainment for the week. Okay, a single person can eat out once a week for $20, right? If not, then you're eating too much. You're eating too much at a single time. Or even if it's $50 a month, you can go to the movies once or twice and you can still eat out. But remember to stick within that budget, because once you go over, you may say, I only went over by $5. I only went over by $50. Now let's multiply that again, 10 months, 12 months, that's $600, right? $600 that you could have used to pay down the debt, save, anything else. And I'm a big proponent of saving. Everybody should have a savings account. The majority of Americans in this country do not have a savings account, but everyone should have a savings account. Start early and put in, even if it's $10 a week, because the interest compounds and that will build over time. So budgeting is a very simple concept, but people treat it like the other 4-letter word. They want no parts of it. And part of it is because they don't want to see reality. Reality says this is what I'm spending, this is what I should spend. And I don't like it when someone's holding me accountable. Well, guess what? You're the one holding you accountable. So I'm not holding you accountable. You're the one holding you accountable. And guess, we discussed home ownership. So budgeting puts you on path to home ownership, which will eventually be your largest portion of your wealth portfolio. Owning a home, not your bank account, nothing else. So the more people we can get to home ownership, the better it is for everyone. And guess what? People need to be in the mindset of, I'm already paying for a home. Because if you're paying today's rents, you are already paying for a home. You just don't own it. You're not getting any of the advantages of it other than being able to walk in and walk out. You're not getting the tax advantages. You may not get the homeowners association advantages. Your neighbors may say, oh, you're only a renter, whatever. But the fact of the matter is, you are not building long-term wealth. And once you own a home in this market, with the way homes have appreciated, you truly have wealth at that particular point in time, and that's how you increase. You could sell that home and all of a sudden you have an extra $100,000, right?
Yeah.
Correct.
People don't think about that. So those are some of the things that we discussed. And one thing is, once you're on your way, once you've gone through your credit repair, once you have, you're comfortable with your bank relationship, you're comfortable with the money in the bank, because guess what? You should have money in the bank before you purchase a home, because there's something called a down payment. Now, aside from that, there are so many different programs out there today to help people with grants, seller concessions, that you could potentially get into a home with nothing down. That's something to discuss with a realtor. That's something to discuss with a mortgage broker. That's even something to discuss with your bank. Don't sell yourself short. Always, always, always bring these things up for discussion. Do not be embarrassed when you go and sit and talk to a banker, because it's my job to sit, listen. I'm like the bartender that's pouring drinks. I hear it all. So for me, you can't really embarrass yourself in front of me, because I've heard so much. I will empathize with you, and at the end of the conversation, I will give you a plan to move forward. And that plan may be, let me refer you to Dr. Hardrick or Damaris. That plan may be, hey, I know a great realtor, Donna, she can assist you, right? There's always going to be a plan. The plan may be, let's do this for 6 months, 12 months, and then let's revisit. You have to be open to the plan as well. But, and as you build your wealth, a lot of people forget about their bank. Now they have an attorney, fantastic. They have a CPA, fantastic. You should still keep your banker in the loop as a trusted advisor. Because if your CPA tells you to do one thing and your bank doesn't know about it, and they tell you to do something else, now you're in a conundrum. What do I do? Right? So keep those three people in the loop. If you are have amassed wealth, or you're on your way to building wealth, keep those three people in the loop, because they are working for you. And guess what? The banker, you don't have to pay them. You don't have to.
I love it.
Yeah, you don't have to pay me to come and sit with me. You just have to make sure that I have time on my calendar to come in and sit with you. But, it's a freebie. And one thing I learned early on in college from was from an economics professor. And he said, no one's going to look out for you but you. Especially when you're in college, because the college is taking money. They don't care if you get an F or an A or you drop out, because you know what? As long as you keep going, and you can be on the 8-year plan, they're getting 8 years of tuition, right? So no one is going to look out for you but you. So you have to invest in yourself. investing in yourself is being disciplined, with paying those credit cards early or on time. We discussed that. Paying your mortgage early or on time. Never wait for the grace period. Never, ever wait for the grace periods. Look at, again, these things that I'm just reiterating. Look at your outstanding debt. I talked to a mortgage broker the other day, and he said they like to see now 10%. You guys discussed that. 30% to 10% of outstanding on the cards. So we're all.
Excuse me, Gary, one quick second. I know Louis has to jump off. I just wanted him to, Louis is a fellow realtor, and, both of us very well known in the community. And people are listening because he's got to jump off to another meeting. I just want Louis, tell us a little bit about where people can find you in your area also.
Absolutely. Want to thank you guys. Great information, Mr. Moses, and we'll be touching base. But I'm with Sunshine Pro Real Estate, and this has been a real good information session, not just for me, but things that I can take to my clients, and also for our listeners that are listening right now. So we appreciate you guys coming in this Saturday to share this information with us. Unfortunately, I have to run, but it's been a great evening, afternoon. God bless you guys.
Thank you.
Awesome.
Louis knows that half the time when people get denied, let me tell you, NSF from the banks.
Yes.
So they're looking at all these things. And so people are wondering, so there's something called an underwriter.
Yes.
And that underwriter, oh my God, the underwriter finds everything about it. Even though the lender may start off and saying, oh, your credit score is nice and you've got a high credit score, you're good, you're pre-approved. And you think you've got some hidden stuff. That underwriter is they're going to find if you're married, you're divorced, all these different things so now, spouse has to come and sign with you, all these things that came up. They're going to find, they're going to find out also about, they're going to look and review your credit, not just your credit report, but they're going to also review your bank statements, all the NSFs. They're looking to see, wow, this person cannot handle just regular. Now you're adding $2,000 for a mortgage, $1,500, so they're looking at all these things. So it's having a healthy credit profile and healthy bank profile is critical. Okay. And as we started out saying, it's a puzzle that you have to put all the pieces. So not because you have a 650 score, that's not just it. How is the income? Do you have enough income to support your new mortgage? How is the debt to income ratio? That's another thing. You may make $5,000 a month, but your debt is $4,000 a month. That's not going to work, right? So can you prove employment? Have you filed your taxes? You can't be fighting and refusing to file taxes and buy a house. You need to file your taxes. Do you have reserves? So do you have, one thing a lot of people don't know is 401k can be used to be used as your down payment. Do you have savings? You can also get someone like a family member to give you a gift. 10,000, 15,000, 5,000. They just need to do a gift letter. There's a lot of ways to get in, but if you have collections, bankruptcy, etc., there are also wait-in times. So it's a puzzle. So it's a puzzle, and that's why you need to prep for it and start the process. If you're in dispute, if you need to build credit with the secured credit cards and all of that, it takes time. So even if you can't get it today, we can do a plan for a year from now, 2 years from now, right? So don't just give up and say, oh, I'm never gonna do this, but make it a priority. Make investing in yourself, fixing your credit, repairing your credit, building your credit, talk to these professionals, because you can't get past that underwriter. You may get past the loan officer, but you will not get past the underwriter who's looking at everything. And now you've got to do a letter of explanation for all these things. So it's a very stressful, but a happy stress. It's like a mom having labor pains, and then you have the baby. So I'm not going to say it's not stressful, because there are documents that you will be required to provide, and people try to buck the system and they refuse. And the underwriter's like, well, you've got till XYZ to send these documents in. You must have proof. If you're divorced and it's if you're married and it's your primary property, it doesn't matter if you have not talked to the person in 5 years or 10 years, you're still married. He will or she will have to sign. So these are just the things that we want to prep you ahead of time. Any last minute? I know you all, you've got the family waiting. Let's do a last minute. Since we were with you, Gary, I know you were finishing up, so we'll go back to you to just finish up.
Okay, thank you. One of the things, I'm going to kind of continue what you just finished saying, how the underwriters look at everything. As I said before, a banker that has a relationship with you is your advocate. So we see things, and we also have relationships with our underwriters. So if they're on the fence, it's my job to push them to your side. However, I can get them to your side. Damaris and Dr. Hardrick talked about disputes. We can get our underwriters to accept disputed items with good and reasonable explanations, right? So if it's a good explanation, if it's a reasonable explanation, we can get them to accept that. And always remember, banks are historical lenders. You guys touched upon history. Banks are historical lenders. So the first thing we're going to do is look at your history, which is primarily your credit report. So you just said this, invest in yourself. That's the only way you get out of any type of mess. And that's the way that you build wealth. Invest in yourself. Thank you.
Awesome. Gary, can you just tell them info how to reach you or your bank info?
Absolutely. So I am at First Horizon Bank. I am a banking center manager in the Winter Park location. My office number, which is my direct line, not a automated attendant, is 321-319-1898. And I'm going to go out on a limb. My cell phone number is 321-439-5435. If I do not answer my phone, please leave a message. I will return the call. And my email is Gary, Gary, Moses, Moses, @firsthorizon.com.
Great. Thank you so much.
Thank you.
What words from Damaris?
Thank you so much, Mr. Gary, for sharing all that information. I was very attentive because I'm always looking to learn and grow. And thank you, Donna, for inviting me. And I can be reached at 407-914-0921. And if I don't answer, please text me. And I always go through my text and try to return all phone calls as soon as possible. Our office for Trinity is located in the corner of Lakemont and Aloma Avenue in Winter Park at 1870 Aloma Avenue, Suite 200, Winter Park, Florida, 32789. And our direct line for the office number is 407-831-2525.
Awesome. Thank you so much. Dr. Hardrick.
Damaris gave all the Trinity information, but one thing I wanted to say, because we're all about education and seeing our populations grow financially and be debt free, is one thing that Gary said was about budgeting. And that's one of our first questions when you call us: are you paying your bills on time? And if not, that's where we start. And also at budgeting, people need to learn to budget at 70% of their income and leave 30% free. so that they can build those reserves and things that Gary was talking about. So I'm glad you invited us. It was our passion to educate. And because Damaris gave all the company information, I just wanted to re-emphasize the importance of budgeting, because credit restoration can do a whole bunch, but it can't give you your goals if you don't actually budget your money. And so I just wanted to make sure we close on that note.
You know, that's so important that you even did that ratio, because people will earn 5,000, 10,000, whatever it is, and they keep going and the bills match. The bills keep matching, you know, so we're like, oh, well, we can spend more. So wonderful tip that, you know, keep that ratio for the emergency, the rainy days. And so we're not, you know, maxing out the credit cards, or if you have to temporarily emergency, or, you know, lack of income or steady income, you know, as soon as you can, pay it down. So I just want to say thank you, everyone.
Thank you, Miss Donna.
Thank you all for joining us. And until next time, we will see you in February, because we are taking a break. So Dr. Bavon, any last word?
No, just a wonderful session. I was watching and listening with some folks, and a lot of questions pops up. Very, very intriguing. You know, the main big question was, what's the point of having $10,000 credit card if you can only use three? But you know, we got the questions were answered, so that's good. You know, and everyone gave that pointer and just different ways of going about it. And I guess that's the purpose why people have more than one credit card, right? So you kind of, you know, keep what? A balance, keep afloat. You know how we island people like to say we rob from Peter to pay Paul. And so
Right.
instead of doing that, you can balance yourself out and stay below the level. And that was just some awesome information. We do appreciate you guys this evening.
Thank you. Yes, we learned a lot. Anita?
Yes, I also want to say it was a great session. I believe there's more to be said, and I think we could probably continue this on another session, maybe in person, as we're trying to work on some of that stuff. But I think it's amazing. I mean, I've been in business for 20 years, but that doesn't mean I didn't learn anything tonight, especially about, you know, certain things in the banking system, which I kind of knew, but I didn't know. So that was good to know, like the check system and how it really does affect you. So it's important to have that information. I think it's good to do one maybe on a business aspect as well for loans and things of that nature. But thank you. Everything was awesome.
Love it. Do you enterprise, do you do for business to build business credit?
Yes, ma'am. So we do offer that, but we always make sure people have their personal credit intact first, because when you first start your business, you're going to be the personal guarantor. And so 2 years in, then you can begin to move it strictly to the EIN of the business, but you're going to need that personal credit first.
Awesome.
Yeah, and to add on that, when you're doing a business loan, unless you're a nonprofit, most banks will always ask for a personal guarantee on a business loan. So your personal credit, you do not want it to stall your business loan.
Correct.
Awesome. Thank you, everyone. I see a beautiful face. Hi.
She's
Your
learning
mom-
early, like
Yes.
Mr. Gary said, teach them early.
Teach them early about building credit savings, about budgeting, staying in your budget, staying in your lane. All right, so thank you, everyone. Until next time, we will see you on Caribbean Diaspora Vibes. This is streaming live on Facebook at Caribbean American Diaspora, and we will be also sending it also by YouTube on Caribbean Diaspora Vibes. So God bless and have a blessed weekend.
Thank you.
Good night.
Thank
Great
you.
to
Have
see
a good night.
Bye.
These right here. 1 minute.